In the previous video, we explored the main reasons behind the titanic home price increases of the last 2 years. Now that the average Canadian home sells for over $800,000, that Vancouver and Toronto made it into the top 10 of the most unaffordable housing markets in the world, and that Canadian homes haven't been this unaffordable in a generation, the million-dollar question becomes, where do we go from there? Before diving into it though, I want to make a disclaimer to make sure that I don't get sued by opportunistic and greedy Americans for bad financial advice. This video was made to entertain and educate about the current real estate market situation in Canada. It is not financial advice of any way, shape or form, and should, like every video on YouTube, be taken with a grain of salt. Now that that's out of the way, let's dive into it. The exuberant and unsustainable market is losing momentum, and the main driver is the Bank of Canada's gradual rise of interest rates to curb down inflation. Some modest price growth is still possible, but the new name of the game is that prices will start going down as early as this year, and it actually has already. In fact, in May, average Canadian home prices has gone down modestly for the first time since COVID hit. Here are a couple of predictions. Royal Bank of Canada now predicts that Canadian home prices have already peaked and that there will be a modest 2% decrease in 2023. Capital Economics forecast Canadian home prices could fall by up to 10% over the next year or so. As for the Desjardins Bank, it predicts that home prices will fall by 10 to 20% by the end of 2023. That's good news for aspiring home buyers, right? Not so fast. Lower home prices will not necessarily translate to better home affordability. And that's because falling home prices may not be enough to compensate for the increase in the cost of borrowing caused by rising interest rates. Indeed, mortgage rates could very well double in the foreseeable future. In fact, mortgage payments have already risen by an astounding $800 a month since late 2021 because of high interest rates and high purchasing prices. And the harder it is for the Bank of Canada to curb down inflation, the higher the rates are gonna go. And to make things worse, don't expect that renting will come in cheap. As you can see here, the average rent cost for a one-bedroom apartment in Montreal went from $1,236 in December 2021 to $1,450,000 in May 2022. That's a 17% increase in less than 6 months. That's also an issue across Canada, with an estimated 6.6% increase in rents in the last year alone. In the longer term, the dust will settle on the unusual circumstances we're currently facing. Real estate affordability may improve again due to a mix of baby boomers selling their homes as they're getting older, people being less in a rush to buy homes, and government initiatives increasing housing supply. It will also help that the cost of raw material has been trending down. Those parameters may however be overshadowed by higher interest rates, a shortage of construction workers which will limit development, and a growing population. If you feel discouraged by unaffordable homes, here's something to make you feel better. Many of those who bought a house during COVID are currently regretting it and are feeling buyer's remorse. And if you're looking for alternative solutions, I have 3 for you. The first one is cooperative housing. That's when you co-own the building and pay rent much cheaper than you would otherwise. This isn't a mainstream option yet, but certainly one worth looking into, and that is bound to gain in prominence in the future. Link in the description below. Another possibility is to relocate where it's cheaper. If you live in Toronto or Vancouver, you could pretty much move anywhere in the world and find cheaper housing. But please don't all move to Montreal. And if you're tired of Canadian winters anyways, you can always buy a house by the beach in Nicaragua for dirt cheap. Finally, if you're a millennial, let's be real. What's preventing you from accessing home ownership isn't sky-high home prices. It's your habit of eating expensive avocado toasts.
Avocado! Thanks!
At $10 each, all you need to do is to eat one less avocado toast once per week, and within 77 years you will have saved enough for a minimum down payment for an average Canadian home. Easy, right? You're welcome. Do you feel preoccupied by home prices? Can you think of anything else that will impact prices in the future? Write down your comments below, and if you found that video to be useful, please consider liking it or subscribing to the channel.